Hello everyone. So today I have come up with a particular investing strategy, which is the stock switch and reinvest strategy. So what is a stock switch and reinvest strategy? So this is a name which I have given for the particular strategy which I normally use while investing. So this is to note that this is not a trading strategy. This is purely a long-term investing strategy. This is a strategy which I have adopted since many years now for creating some sensible amount of profit in the stock market investing. So this strategy helps you to make profit and to sell the stocks at the right time and also reinvest the money to make more profit out of that by not losing the advantages of compounding. To explain the stock switch strategy, let us say there are stocks named A and B, and say you had bought this stock A 5 years back or say 3 years back, and you are currently sitting on a profit of say 120%. You have compounded the stock, you must have got dividends in that stock, so I am not considering that, but only the stock price, say it has reached 120%, and that you feel that the fundamentals of the stock is changing, the management has changed, their business strategy has changed, and that you don't find value in that business at all, or say the stock has reached high valuations and it is overpriced. Say in that case, it's time for you to sell the stock. There can be reasons that the revenue generated by the stock you hold, that is reducing, say the profit margins are reducing, say the competition has increased, they have lost their moat, they have some government policy which is against their business, and this is making them reduce their revenue or reduce their profit. So in that case, obviously you will have to get out of your emotions and sell the stock. So while selling the stock, it is very important that this stock has given you good or decent amount of profit over the years, and in that case you have to sell the stock obviously, but the money you are getting out of the stock has to go to some other place wherein this returns which you have got in stock A has to be consistently there in the coming years also, or maybe more returns than what you have got in stock A. So how you do that? So you have identified say stock B. Say that stock B is having a good fundamental business, good management, good moat, or maybe they are trading at a 52-week low because of say the recent stock market crash due to the inflation fear, due to say the geopolitical tensions, or due to other reasons. So the stock was fundamentally strong, but because of the macroeconomic factors, the stock has gone down to its near to 52-week low, or say the stock is undervalued, or say the book value is much high and the price to book value is very cheap. So in that case, you can consider investing in that stock. Say the stock is paying good decent dividends in addition to the profits they are reinvesting back into the business. So that's a good stock to invest in. So you know how to analyze a stock, which we have explained in our previous sessions in the value investing series. So once you identify that stock B, then whatever stock you have sold and profit which you have gained out of profit and the principal you have gained out of stock A selling, you have to immediately use that money to reinvest in the stock B. In the earlier case, we mentioned that you have got a profit of 120% on stock A. Say for calculation purpose, let us consider 100% profit. So 100% profit means you had invested 2 lakh rupees and it has become now 4 lakh rupees. So you can opt two strategies. One is to completely invest 4 lakhs into that particular stock B, which you think that the stock is really good, undervalued, and it will give a good potential multi-bagger returns going forward. Otherwise, if you are a slightly conservative investor, then you can take the 2 lakh profit from stock A selling and invest that in stock B, and the 2 lakh which has been the principal which you had invested while buying stock A, you can utilize that to some other conservative investments. So maybe you can use that for putting it in some mutual funds in lump sum, or you can split it over some months in an SIP mode, or maybe you can invest it in some commercial real estate property like strata I told. So there you need higher chunk of money, 25 lakhs. So 2 lakhs is nothing, but still if you have some other funds and you can add this 2 lakh to that fund and invest there, then that is one option. Otherwise 2 lakhs you can put it in some other stock as well. I will not tell bonds at this point because bonds are yielding very less at this point, at this juncture. So stocks, many of the stocks, blue chip stocks also are at, or many small cap stocks are at very low points, 52-week low points. So you can probably invest in them. So you can split 2 lakhs into two stocks, one small cap stock and one large cap stock. So large cap stock will not give much returns, but it can be a steady growth and less risky bet. But in a small cap stock, you will have up and down frequently, but still it can give much higher returns going forward if the stock is or the business which the stock is owning is really good. So in this case, as we were discussing, I will tell my own example of some stock switch strategy. So I was owning SBI bank stocks since very long. So I used to own State Bank of Travancore stocks before it had merged to SBI. So at that time, I had got double the shares in SBI while it has merged. Then I had bought into some of the stocks in SBI as well. So I had some good chunk of stocks in SBI. So recently there was Adani issue. So I had my concerns over SBI banks because it is having 30,000 crore odd crore loan given to Adani stocks. So Adani was falling anyhow. They had a lot of debt and there are a lot of issues and fundamental issues related to that stock as per me. So though I was bullish on SBI, because of this Adani issue, I had my own concerns. So I had to sell the stock because of these fundamental issues. And then I reinvested that money into HDFC Bank. So HDFC Bank was at some 52-week low at that time. So at that time, SBI was at its 52-week high. So rarely you get such opportunities. So I had to sell SBI stock at its near to 52-week high and then reinvest that amount in HDFC Bank. So now the HDFC Bank has given since then a good return. Now again it is going high and SBI has fallen to very low levels in the same period. So you really need to analyze the stocks, where to reinvest, when to sell. Such decisions are very important, which are critical for you to make good profits. Also, while selling the stock, you need to really think about the taxes as well, the capital gain tax. So there are two types of capital gain tax. One is short-term capital gain tax and another is long-term capital gain tax. So regarding short-term capital gain tax, if you are selling the stock within 1 year, then you will have to 1 year of holding period, then you will have to pay 15% capital gain tax, short-term capital gain tax. And if you are holding it beyond a year, then it is converted to long-term capital gain tax. So there you will have to pay 10% flat without indexation benefits. So that is again the advantage of holding it for more than 1 year. And also it is to be noted that if your profits are 1 lakh or below 1 lakh, then there is no capital gain tax you have to pay, because up to 1 lakh it is not taxable in equities. So end of the day, it is not that you have to tell your friend that you have bought at this stock and you have bought it at this price and then sold at higher value. You have to be really tax efficient as well, because 15-20% or 10 to 15% taxes are also good enough for wiping out your good amount of profits. So you have to be tax efficient as well, and you should use your brains to be tax efficient, get maximum tax efficiency, maximum profit, and do loss harvesting as well. So stock switch strategy is very important, because for this you will require discipline, proper insights to the stocks which you have invested in. As I told, the stock switching is very important, and stock selling is also an emotional event. You would have stick to that stock for a very long time, but you will have to let go that emotion and be practical as a businessman. So once you have to book the profit, you have to book it, but to cut off that emotion, you have to reinvest in another stock wherein you will not repent that this stock I should not have sold, it had gone up again, etc., etc., because that stock you are switched to a good stock again which is undervalued, and you are gaining much more than what that earlier stock would have gained for you. Another stock switch strategy is like, say you had bought stock A and you have made a good amount of loss, say 50% or 60% in that stock, and you have lost your more than half of your capital in that. So don't get emotionally stick to that stock. Just use this stock switch strategy and say book out that loss and reinvest that money into a new undervalued stock. And you can use the loss harvesting there, tax loss harvesting, in the sense, now you have hold that stock say for longer period, so it is applicable for long term capital gain, and if it is shorter period within a year, then short term capital gain. So you can offset that loss. Say you had made a 50,000 loss in that particular trade, then that 50% or 50,000 rupees loss can be offsetted against the profit booking in that period. Say you have a short term capital gain profit and short term capital gain tax on that profit for that year, then that profit, say you have made a 50,000 profit and your loss in stock A is 50,000, then you can offset it and you don't have to pay any tax. So you can save tax in that sense. So it is not that you have sold the stock in complete loss, then that money is completely gone. You can use it for a tax efficient way of utilizing that loss. Though you will not be able to recover that loss completely, you can at least make it tax efficient and offset that losses. And obviously you can cover up that losses also, provided you are reinvesting that money say 50% eroded money back into a stock which is highly undervalued, say more than 50-60% undervalued, then whatever you have lost in stock A will be gained in stock B as time goes. So you should know that it is always a game of long term investing, and until and unless you book the loss or profit, it is not a realized one. So cut your losses, just get out of the scrap stock, then get into a good stock. Always I say that invest in a quality business, and many times you can go wrong on that business because everything is not in your control. You are just a small investor, we are all just a small investor, so you cannot control everything or predict everything, but 90% you can make a conscious call by investing in a good business which probably will not go wrong in our predictions. And say 10% you have to give away, because that is how the market works, everything cannot go right. So that 10% you have to strategically utilize and book the losses and use that for tax loss harvesting, and also reinvest the remaining money into a good stock in an undervalued stock. So the entry price is very important. Undervalued stock will going forward fetch you a good return. So hope this session of stock selling and reinvesting strategy was useful for you. Please do share your suggestions and comments on this strategy, or maybe you would have indirectly done this strategy many times without knowing that you had done this strategy, but you really have to incorporate such a discipline of selling the stocks in the correct time and reinvesting and staying long in the stock if the fundamentals of the business is intact. So hope this session was useful for you, for assisting you in your investing journey. See you in next video. Till then, happy investing.